Welcome to the TNT Real Estate Podcast, where we spark conversations that set you up for real estate success. I'm Tyler.
And I'm Tanya, and each week we bring you expert tips on navigating Northern Ontario's real estate market. Whether you're buying, selling, or investing, we've got the tools to help you thrive. Okay, so Tyler, big news this past week where the U.S. imposed trade tariffs on Canada, 25% across most sectors in our economy. We're probably a little fortunate that they didn't last very long and that we've got a bit of a reprieve. But in the event they come back again, what are your thoughts on how this could affect Canada, our economy, and all those things?
The main question here is, what could it not affect in Canada? It's going to affect everything. It's going to affect affordability. It's going to affect trade with other countries. It will literally affect everything. But I think the biggest thing is that obviously we proposed counter tariffs. They went away for a little bit. They are going to restart March 1st. So we have to be prepared for that. So what could it mean? Obviously, it can hit the dollar pretty hard. The dollar is going to keep dropping. It could potentially send us into a recession in Canada, which we are basically already headed for already. But I think the big one is kind of consumer confidence and what that does to the general people, me and you and everybody else that are just, regular people trying to survive in Canada, right? So I think the governments are kind of having a battle on who's the stronger government, who's the stronger person leading the government. And I don't think they're going to back down very easy, but everything kind of just gets passed down to the consumers,
right?
Which makes it difficult.
Yeah.
So I think the big things to watch out for, obviously, is the recession. That's kind of been creeping up for the last couple of years anyways, and I think this is just going to push us over the edge. So what does this mean? What does a recession mean for us, basically? Which is lower consumer confidence, job losses, maybe a slower housing market as well. And because the housing market is keeping Canada alive right now, if that decreases, what does it look? What's the 5 to 10 year outlook look for the consumers, right?
Yeah, so it's really hard to sort of predict how it's all going to come into effect, if it does even come into effect, these trade tariffs, right? I mean, we're kind of on the verge right now in Canada where we have an election coming up and, we don't want to talk too hot about politics and, who we support, certainly. I think it's nice to sort of have a conversation talking about what the different parties have on their platforms and what they're proposing to do to combat recession. Recession leading to job losses is always a scary thing for Canadians. Mm-hmm. So I think it's going to be interesting to see what happens on our national scale with our various parties that are running for leadership, what kind of platforms they have to combat, tariffs for one, right? Mm-hmm. If we can stay strong and stop tariffs from happening, or if tariffs are going to come into play, how is the Canadian government going to shift to help the Canadian people sort of deal with things like job loss? The lower loonie could be something that could affect some, certainly some investors and some people here, but couldn't the lower loonie also then help combat our sort of increased tariffs?
I mean, there's always that potential for sure, and it's really only an issue when we're trying to buy things outside of Canada, mm-hmm. that the lower loonie is affecting it that much. But when you look at what the tariffs are kind of aimed towards, it's construction material. So obviously, construction costs in Canada with the tariffs seemingly become more expensive. But if you look at the number of exports that Canada is sending to the States and imports that we're taking from the States, it kind of balances out at the end. Like, we're taking in more kind of concrete and like hard goods like that, but we're sending out a lot of our wood. Mm-hmm. So if we have an oversupply of wood that can stay in the province or the country, doesn't that mean wood prices will come down? So we might have to pay a little bit more. We might have to look at different kind of avenues for our construction costs, like concrete and bricks and mortar and stuff like that. But if we combat that with lower wood prices, technically it might be a good thing. that we keep more of our wood, and we export most of our good like the higher quality wood to the States, and we keep the lower quality for ourselves. So I mean, if we're building houses with better construction materials, couldn't that be necessarily a good thing?
Well, it would be a good thing, certainly, and especially if the cost of those materials can come down somewhat. I think we are, like you mentioned, the various products that go into home building, certainly, and they go back and forth across the border. We export, we also import. And also here locally in Sudbury, we are a big mining town. I know we're founded on mining. Thankfully, we've diversified our economy quite a bit in the last 10 or more years, but a lot of our industry does rely on nickel prices, nickel trade, and certainly a lot of our nickel exports to the U.S. We're probably one of the biggest exporters to their country, and certainly that's going to affect Canada in a lot of ways. And a lot of our products, even we have some nickel that comes in from the U.S., a small portion for refinement because they don't have any refining capability there. So there is sort of that intertwined nature between Sudbury in particular and the U.S. as well. So if these tariffs do come into play, it could be certainly a concern for our local economy, our mining sector, certainly. But hopefully it doesn't last very long because from what I understand, I'm not in the mining sector, but from what I understand, our nickel products is better than what they import from China.
Yeah, the best quality for sure.
Yeah.
But another thing is, and it's kind of off topic, but kind of union negotiations are starting to come up as well. So we have to kind of get that under control, hopefully, to kind of save the greater economy. But if the tariffs come in, what do you think happens with interest rates? And not even tariffs, but recession as well. It's kind of all, we're talking about one thing basically right now.
Right. Yeah. So like the tariffs would sort of slow our GDP growth, and then of course potentially lead to recessionary trends. What the government would typically do in that situation, my understanding, would be to decrease interest rates, right? To sort of get people spending more money, get people investing in Canada, especially, and that should hopefully, help with. Right now, the affordability in houses is one thing. Certainly, those high interest rates have been keeping some people out of the market. And so potentially those lower interest rates would help people get into the market in some ways. However, we're not really making more houses fast enough to combat the demand. And what do you think if we do see interest rate drops? And I think we had recently just read, there was an article that came out from BMO, from their chief economist, and one from RBC as well, that projected a certain amount of decreases. I can't recall exactly those numbers.
I think it was 4 this year, four quarter points.
That's amazing.
Yeah.
Hopefully. Is it amazing? Is it good or is it bad?
Well, it's amazing in the fact that we can afford more things, but it sucks in the fact that we need to do that to be able to make houses more affordable. Like they should be affordable at 5% interest rates where it's kind of safe for the banks and for consumers. But when we see 2% interest rates, it seems great. Everybody's out there buying potentially. But it's like, are these houses really affordable, or are we just getting cheap mortgages?
That's a good point there. And we kind of saw that at the lead up, sort of like the beginning of the pandemic. Interest rates were still very, very low. And we saw this huge run up in housing demand. And that really caused the housing prices to just skyrocket across here locally and across the country as well, right? So was that really good for housing affordability if it increased the base price of a home so dramatically?
Yeah.
I don't know.
And one more thing I wanted to mention on that is that even though interest rates are low, we still don't have the amount of houses that we need for the people that are living in our country. So I think that's one thing that we've never seen in a recession in the past is a lack of quality housing for the people that live here, right? So I think that's going to be one thing that we have to watch during this election. This recession, not election.
Recession and election.
Recession and election. But I think that's going to be a key factor in this as well.
Yeah, absolutely. I mean, that's a really key point in this whole supply and demand market, is that if we're not increasing the supply of housing, decreasing the interest rates isn't going to help anything. It's just going to help those bidding wars start again and
drive up prices.
Which is not really making things affordable.
Yeah.
But certainly, if consumer confidence is lacking, then perhaps that will dampen people's drive to purchase properties, whether it's, a home for their own living in or for an investment. And that could temper things a little bit. Well, that remains to be seen, I suppose.
Absolutely.
Yeah.
So final question, what do you think, what's your advice to consumers going into 2025 with all these recessions and tariffs and everything's being threatened on our economy? What's your advice?
I think it's going to be a year sort of like a bit of a year of uncertainty. We're not going to know from 1 month to the next if tariffs are going to happen. Maybe there's going to be something else that, some other big news item that's going to sort of decrease that consumer confidence. But, we talk about this with our investors and with our real estate clients looking to purchase their own homes. Is now the right time to buy? So whether you're moving from an apartment into your first home, if you can afford it, you've got a pretty stable job, it's not going to save everybody from potentially being, laid off in the future, right? There's always that risk when you get into home ownership, get into some large commitment. It's potential there that you could lose your job and be in a position. But if you feel confident about your position and you can do it economically, we're still here locally at a point where it's more expensive, I think, to rent than it is to buy in a lot of cases. So if you're in that, you're ready to make the leap into home ownership, and other people are not feeling so confident, maybe now you could get a good deal, right? However, if everybody just feels that drive to buy, you may be competing quite a bit. So it's going to depend on your situation. And I think investors as well are going to have to evaluate whether they can take that risk. Are they going to buy this income producing property now and take that risk that potentially with a recession, there's going to be some layoffs and potentially more vacancy? However, as a whole, our vacancy rate has been always very low in the last several years here locally, and it should remain so, I would say, but I'm not too sure. What are your thoughts on investing in real estate during this time of uncertainty? What do you think?
I'm just gonna go off of what you said basically, and it's at the end of the day, it's when you're ready, when you're stable enough to make that investment, I would still make it. I think at Sudbury, we're pretty insulated, and I'm talking about Sudbury kind of specifically. When you see headlines of, average price across Canada last year in 2024 decreased over 10%, Sudbury increased 10%. So I think our local economy is way different than what's happening on a national scale. And I think as long as you are crunching your numbers correctly, making sure your own personal, investments are safe, I don't think there's a bad time to buy. And just know that, what we're going into is might be, tumultuous. But I think when you're buying for, 5 to 10 year outlook, I think it's still a safe investment.
Yep. Yeah, I would agree. Thanks for tuning into the T&T podcast. If you've enjoyed today's episode, don't forget to leave us a comment, subscribe, and share with a friend who might be interested in real estate.
We'll catch you next time, and until then, stay ahead in real estate.